Okay, welcome back students to the next video for the general ledger chapter. This video will deal with purchase returns. We just did one on sales returns. So now we're going to do a video on purchase returns. So this is exercise 8.15, still on page 202 in your green books. This is just a short video to explain to you, or not explain to you, to show you an example of what the purchase returns will look like. You've done the purchase returns in the example as well. So it's not a transaction that you haven't seen before. This is just within an exercise to show you how it will work. And in this example, we're also going to look at closing off the purchase returns to the building material account. So the total returns that were made. Remember in the explanation video I told you when all of the returns happen, we still have to take the total returns to the building material account because the building material was obviously sent back. So we need to decrease or lessen the building materials on the credit side for the return that happened. Okay, so this video, or this set of books, this exercise is for September 20X4 and the books are Vuleco Builders. There's going to be a couple of purchases. You've done plenty of them before, so I'll just go through one and then you can go and follow the colors again. I've color coded them for you so it's easy to find your double entry principal, your debit and your credit. So the first transaction on the first was that we ordered materials 1,500 from Utenex Sawmill and we receive an invoice. So obviously this is a credit purchase, that's why there's an invoice. We bought materials, so our materials must increase. So if you look at the building material account, it's an asset account, it increases on the debit side. So we debit building materials. It was a credit purchase, so therefore debit the building materials with the accounts payable as contra account. So there's your debit. Your debt will increase. Remember, this is a liability, so minus plus. So on the plus side, you owe them more money. On the credit side, the buildings material purchased for 1.5. So debit building materials, credit accounts payable. There's your double entry principle. Now the first three transactions are all similar. The first, the 7th and the 11th is all purchases of material on credit. So they're all the same. You've done plenty of them. I don't want to spend too much time on those. I do, however, want to have a look at the transaction on the 14th. On the 14th, it says we sent one pallet with the wrong color bricks back to Algoa Bricks with a debit note for 450 Rand. So now we're returning goods. We weren't happy with the bricks we received from Algoa. We're sending it back. So we're now dealing with a purchase return. So when I purchased this, my debt increased. My debt went up. So the debt is now currently sitting on this side, on the plus side, the money that I owe. When I return, I'm not going to pay for the goods that I return, so my debt must decrease. So on the debit side of accounts payable, I will now decrease my debt with the amount I sent back. I sent back goods to the value of 450, so I'm going to debit accounts payable with the 450, and I need to credit another account. This was a purchase return, so on the credit side of purchase returns, there you'll see the 450. A credit purchase that's being returned. 19th is something similar, another credit note, return of 150. So you'll see my debt will decrease on the debit side, purchase returns of 150, credit purchase returns 150. So you see the story. Once you understand that it must decrease your debt when you send it back, one debit, one credit, this is very easy. There was also a return on the 25th. So you're going to go and have a look at the return on the 25th for 100 Rand. Okay, the last thing that wasn't included in the previous exercise, only if the question tells you that it's now the end of the financial year and we have to close off the account, then you need to close the purchase returns and the sales returns. The sales returns will be closed off to the sales account. It will lessen the sales. And the purchase returns will be closed off to the material account. Why? Because currently all the material I purchased is sitting in there, and even though I made returns, I haven't decreased my material yet. So I'm only going to do it once off at the end of the financial year with the total. So I'm going to go to my purchase return account. There was 3 returns, 450, 150 and 100. So a total of 700's worth of returns. I'm going to take this total, the 700, out of the building materials account. My building materials will decrease Remember, this is an asset, so on the credit side of building materials, with the total returns for the year or for the period, whatever you're doing this for. So credit building materials with the 700, and we debited purchase returns with the 700. So there's your double entry principle. And that's it, people. That's basically the returns. So there's now two examples for you with exercises as well as the explanation video. I'm sure you'll be fine with the returns. I will tell you what other exercises you need to do for chapter 8 for the general ledger.